proceed. Okay, I'm just sharing my screen with you guys. Just sharing my screen, and then we will get into question 5. Question 5. Okay. Question 5. What's happening with question 5? It says, write up the cash book receipts, all right, and cash book payments for May 2015 using the appropriate transactions. For the journals provided, you may use the names of people or companies you are paying in the details column. You do not need to total the journals at the end of the month, and you do not need to enter document numbers. Okay? All right, guys, if they tell you not to do something, don't waste your time doing it because you won't get any marks. Right, focus your time and energy on something that's going to give you marks. Okay. Then up top, it says you are the bookkeeper. All right. The business is registered for VAT and trades only with other registered VAT businesses. The business charges 14%, just imagine 15% on all its sales. All amounts are inclusive of VAT, okay, unless VAT is not applicable, all right, or stated otherwise. The business uses the periodic inventory system, okay. So here, can you see? We never did an exercise with the periodic inventory system on the journals, all right? But let me tell you now, when it comes to the exam, either they'll ask you the accounting equation on the periodic, or they'll ask you the journals on the periodic. One of the two is going to be on the periodic, okay? You have been assigned the task of writing up the cash book receipts and cash book payments for the month of May. No document numbers are required for your journals, and the journals do not need to be totaled at the end of the month. Cash is deposited daily. Makes our lives easier. Cash is deposited daily. All right, so let's get into it. Okay, again, if you want to ask a question, please feel free to switch on your mic. Okay. Right, so we've read through what they wanted us to do. The next step we know is to then read each transaction. Okay, right. So again, I'm showing you guys the answers, but obviously I want to, more than anything, since we're doing revision, because you should be able to do these things already, I want us to be focused on how we are arriving there more than the actual answers. So let's quickly read the transactions and know where they're being put. So first transaction, Tim White. Yes, yes.
For periodic, we don't account to the cost of sales. Is that correct?
Yes, that's correct. Is that all you wanted to ask?
Yes.
Okay, perfect. Yeah, so we don't account for cost of sales in the cash receipts journal. And then last thing I'm going to show you now, since we're on the subject, can you see we don't have a trading inventory column. We have a purchases column in the cash payments journal. Okay, right. So those are the two things there. And then also just remember the other journals also are affected in a similar fashion. Okay, so just go over the illustrations again in unit 6 just to see that. At least practically we're seeing it in the cash receipts and the cash payments today. Okay, so let's go through each transaction. Thank you for asking that. Okay, Tim White, the owner, increases his initial cash contribution. So we know this is a capital contribution. All right, this is going to affect the cash receipts journal. So we write next to it, cash receipts journal, CRJ. Then the next transaction on the second, it says purchase printing paper and files for Waltons. All right, so this is stationery that's being bought, and it says issued check. So we paid by check. So this is the cash payments journal that's affected. Next one, paid TM adverts per check for monthly flyers and marketing material. All right, so this is an advertising expense. All right, by check. It says we paid by check, so this is CPJ as well. Then it says PM Stores, a supplier, paid PM Stores, a supplier by check, all right, in settlement of his account. All right, so in other words, we paid our suppliers, our creditors. Okay, okay, no problem there. So then it says an invoice was recorded for 5,700 against a return of a return for 1,140. These were the only two transactions. Okay. So in other words, we owed someone and we've gone and paid them, all right, by check. So this is going to be affecting the cash payments journal, all right. Initially, we owed them 5,700, all right, but then against a return of 1,140. So we're going to take that 5,700 and minus it from the 1,740. On the 5th, it says paid engine for petrol using petty cash. Okay, so that's going to affect your petty cash journal. We're not operating with that, so we need not pay attention to that. Okay, move on to the next one. Cash sales recorded per cash registered till. Okay, so we're receiving cash, so that's going to affect your cash receipts journal. All right, your CRJ. Next one, trading inventory purchased from Rob stores per check. So that's obviously going to affect your cash payments journal. 70 items were purchased at 200 Rand each, exclusive of VAT. Okay. Move to the next one, paid by check to Neotel for monthly telephone charges. Okay. For monthly telephone charges. Okay, so that's obviously going to affect your CPJ. Okay, paid by check. You can see that there. Then the last one, it says received a check from W. Brown, a customer, in settlement of account and issued receipt accordingly. Okay, so somebody who owed us, a debtor, is now coming back and paying us. He owed 5,400 for a purchase. A credit note for 760 was issued during this period. These were only two transactions. So again, just a reminder, but you guys should know this. A credit note is what is issued when somebody has returned goods, right? Somebody's requesting a rebate or someone was overcharged. Okay, so our customer got a credit note. That means that we either had goods returned to us, or we overcharged him this 760, or they requested a rebate. Okay, so either way, we're going to deduct the 760 from the 5,400. Okay, and that's going to be recorded in the cash receipts journal. We flip the page. We have 4 other transactions to go through. Interest recorded on investment from Absa Bank, issued receipt accordingly. So we received interest, all right, on an investment. So this is going to be interest income. Okay, and that was for 960. Okay, so that's going to affect your cash receipts journal. Then credit sales to RED, issued invoice. Okay, so credit sales we know is going to affect your debtors journal, and therefore we're not interested in this because we're only doing the cash receipts and cash payments journal. Okay, then the next one, paid SPA for cleaning items purchased using petty cash. Again, this is going to affect the petty cash, so we're not interested in it. Then finally, it says purchased inventory for resale from Lynn stores per check. So this is going to affect your cash payments journal. Okay, so fortunately we have the answers there, so that's going to save us some time. But let's just go through each transaction that affected the cash receipts. So we know that the first transaction happened on the 1st when the owner contributed capital. So here's the first mistake that I was telling you guys about. Because this was a capital contribution, typically analysis of receipts, remember, is your till. Okay, so maybe it's not a mistake, all right, but this is your till. So it says that he increased his initial cash contribution, all right. So typically this is a capital contribution, and typically it would be deposited directly into the bank, all right. But since they said cash contribution, I guess it's okay if you put it here as well in analysis of receipts. But typically, I'd rather not include it over there. I just put it in the bank, and then I'll put it under sundry and say capital. All right. Remember here under details, we're writing the name of the owner, Tim White, not capital. You get it wrong. You wouldn't get your mark here if you put capital over here. Okay. Right. Then we move on to the next transaction. We know that there's no VAT on capital, so we haven't done anything there. Move on to the next transaction. Happened on the 6th in relation to your cash receipts journal. It says cash sales recorded per cash register till 6,800. So we know that somebody walked into the store and bought for cash. So under details, cash sales, guys, some of you were just writing cash in the test. You have to write cash sales, or at least sales, not just cash. Okay, what type of cash is this? What type of transaction is this? All right, there's several transactions where we could maybe be receiving cash. Okay, it must be at least sales or cash sales. I'd prefer cash sales. Okay, so 6,840 under analysis of receipts. Then bank, remember they said we bank our amounts every day. Okay, so immediately that 6,840, we're plugging it into the bank. All right, then sales column, we know that it's that exclusive amount. So here, just remember your amounts are going to be slightly different because I calculated these on 14%, but this was obviously, you guys are obviously going to calculate on 15. So you'll be slightly different from my calculations. Then here, VAT amount or output VAT, we know every time we make a sale, we need to include our output VAT, and that's what we've done over there. Okay, I think I heard something in the chat. Let me quickly just check. Okay, nope, nothing in the chat. Okay, cool. So let's proceed. Then on the 9th, remember we had that customer pay us, the debtor. Can you see we didn't use 5,400? All right, we didn't use that because we had that credit note. All right, so we minus the 5,400 from the 760, and that's how we arrived at this amount. All right, we received a check, so that's why we put it in analysis of receipts. Okay, all right, and that's why we put it also in bank. All right, and we didn't calculate sales, we didn't calculate output VAT, because we know we did this in the debtors journal when this person initially bought goods from us on credit. Here we're recording the actual receiving of the cash or the check. All right, and here we then put the 4,640 under your debtors control. Okay, last transaction happened on the on the 10th, when we received interest from the bank. Can you see? Look at your bank statement. You know that the interest is just applied to your account. So this is not money that goes through the business. You don't have people, representatives from ABSA come into the business and say, here's your interest, and then we put it in the till, and then we go and bank it later. No, it's already sitting in your bank. Okay, so we put 0 under analysis of receipts, we put that in the bank. And again, we know VAT, or should I say interest, is exempt supply. Okay, so we're not calculating VAT on that. And then we go to sundry, we put the 960, and we say interest income. Okay, are there any questions in relation to this? Please switch on your mic and ask. If so, okay, otherwise I'm going to move on to your cash payment journal. Just check the chat quickly. And nothing there. Okay, let's proceed. So the next thing that they wanted us to do was the cash payments journal. Okay, and likewise there we simply go to wherever we wrote cash CPJ. Okay. All right, so first transaction happened on the 2nd. Okay. And then we were purchasing printing paper, in other words, stationery. Okay, and that was for 1,140. Okay, so we know that was with Walton's. We know that it's going off our bank account. And again, reminder, can you see we have a purchases and not a trading inventory column? Okay, then we know we can claim input VAT on stationery, so that's exactly what we do. And we know that the difference we put in sundry and we put stationery under details. Next transaction happened on the 3rd, and there we were doing some advertising. We did it with TM adverts. Okay, that's the total that went off our bank account. Remember, we know that as a customer, we're paying the VAT inclusive amount, okay, not the VAT exclusive. So here they were testing to see, do you know your story as to the bank column must be inclusive of VAT, okay, and not exclusive. So you needed to then calculate that. Okay, awesome stuff. All right, and that's why we have 3,420 as opposed to 3,000 there. We know that we can claim input VAT on advertising, so that's exactly what we've done. And then obviously the difference is then what we then put under sundry as advertising. Okay. All right. Then the next transaction happened on the 4th. Then we were paying our supplier. Okay. Again, we know that the total of what we owed him was 5,700. But then, remember it says return for 1,140. So we take that 5,700 and we minus 1,140, and that's how we arrived at this 4,560. Okay, and there we plug that into the creditors control column as well. Okay, and here this is the second error. We weren't supposed to record this in purchases. Okay, so teacher there made a mistake. We weren't supposed to record this in purchases. Much like, can you see here in sales, we didn't record sales here. We just said debtors control, and we said bank and analysis of receipts. So here also, we're not supposed to be calculating your, what's this? Your input VAT and your purchases. Because we would have calculated input VAT when we actually made the purchase. Okay, would have been, so these two should be blank. Okay, right. Then we move on to the 7th. The 7th, trading inventory purchased from Rob stores per check, 70 items. And again, this time they're giving us exclusive of that amount. So you need to times that 70 times the 200. That should give you 1,400. Is it? Am I right? No, actually 14,000. Okay, but we know that inventory is standard rated. Okay, so we need to actually calculate the VAT inclusive amount. Now, that's the amount that's going to go off of our bank. All right, and if you do it on 14%, you'll get this 15,960. Then purchases, we need to plug in that 14,000, the amount exclusive of that. And here we were supposed to calculate input VAT. So there should have been 1,960 over here. Unfortunately, a teacher also slipped up there as well. So just take note of that as well. Okay. Then on the 8th, payment by check to Neotel for monthly telephone charges. Okay, monthly telephone charges. Okay, so again, can you see they gave you the exclusive? So under bank, we know we need to use the inclusive. All right, and so we calculate the inclusive, which will give us 2,850. Then we know we're actually supposed to calculate VAT as well there. So that should be 350 over there under input VAT. And then finally under sundry, we have our VAT exclusive, which is 2,500. Okay. Then the last one that we have for the cash payments journal happened on the 13th, and then we were purchasing inventory for resale. Again, can you see they gave us the VAT exclusive? So you can even start here by saying purchases 8,000. All right. Then we say, I know we can claim input VAT on this. So let's calculate the VAT amount. On 14%, you're going to get 1,120. On 15, you get slightly more. And then finally, we know that in bank, it's the VAT inclusive amount that we have over there. All right. Awesome stuff. Okay. Cool. Then we move on to the last question that I'm going to do with you guys, and then we'll call it a day. Are there any questions so far? Is everybody happy? Are we good? Okay. Right. I'll assume the silence to mean, sir, we are good. Proceed, finish up, because we are tired of hearing your voice and we'd like to get on with the rest of our day. All right. Awesome stuff. So, question 6. Let's see. Under the required, what does it say? It says post the following accounts in the general ledger using the opening balances provided and the information from the journals. Balance the general ledger at the end of the month where applicable. Folios are required when posting to the ledger accounts. Okay, this is where we really test your folio, in the general ledger and also in the general journal. General journal, general ledger, there you must just put the folio, even if they don't ask you to, because you never know. Sometimes they might not ask you to, but they're assuming that you know that you should have. Okay, so in the general journal and general ledger, please just do yourself a favor and do that. But let's read the rest of the question. It says the following information was extracted from the accounting records of news traders for May 2015. VAT does not apply to all transactions. The business uses the perpetual inventory system. Account balances as at 1 May. There we have bank favorable 19,600, creditors control 23,320. The journal totals, selected totals and columns appear in the following as at 31 May 2015. Okay, now first journal they give us, there is a cash receipts journal, and can you see they haven't given us the bank amount? So it's our job to then find out what should be there in the bank amount. Okay, and how do we calculate that? By adding up all those totals over there, except for the cost of sales column. All right, so the 15,000 under sundry, the 20,000 under debtors control, and then the 30,000 under sales, which will give you 65,000. Okay, then we move to the next journal. Okay, again, they haven't given us what should be in the bank. So we then say, okay, what do we have under sundry? 10,000. What do we have under creditors control? 14,000. And we have trading stock of 50,000. So the total money that was spent from our bank account in the cash payments journal must have then been 50 plus 14 plus 10, which gives us 74,000. All right, so we have that there. Then finally, we have the creditors journal, right? And there, again, they haven't given us the total on the creditors control. So what we then have to do is to say, okay, how much did we spend on credit purchases? We know that we spent 10,000 on trading in stock or trading inventory, and we spent 5,000 on stationery. So the total that we should have in our creditors control column is 15,000. Okay, right. And then they want us to do the general ledger or the T accounts for those respective accounts. They bank, stationery, creditors control, debtors control, trading inventory, and petty cash. So now all that you need to do is to post the amounts from these respective journals or from the information given. Whenever you open a T account, remember the first question that you ask yourself is, do we have an opening balance? Now for bank, we do. They told us it's 19,600, so we plug that in. Here they told us it's favorable, so we know bank is an asset, so we're going to debit that amount. Okay. Sometimes they might not tell you that it's favorable, so you must know. By virtue of bank being an asset, we know that it increases on the debit side. So if they hadn't said favorable but also not said unfavorable, then we know that, okay, I must debit that amount. Then the next other place where we see bank is in the cash receipts journal. All right, and we know in the cash receipts journal that's us receiving money. So here, guys, for you to post from the journals to the general ledger, you have to know what that journal is all about. So we know that the cash receipts journal is all about us receiving money. So under details, we write total receipts. So here under balance, we should have written BD for, no, actually, sorry, we're supposed to leave it like that. Here under we write total receipts, all right? And here under folio, we should have written cash receipts journal. And since this was for January, we should have put a 1 over there, okay? A 1 just to show the examiner this is for the month of January. If you put cash receipts journal or you put CBR, either one, CRJ or CBR, you would get your mark, okay? And then obviously we put that 65,000 that we calculated. All right. Then we move on to the other place where we see bank. All right, which is in the cash payments journal. All right, and there under details we write total payments, and under folio we're going to write CPJ or CBP. Okay. And then we put in that 74,000 that we calculated, which was the 50,000 plus the 14,000 plus the 10,000. Okay, done. Now that we've done that, we then have to balance the account. So we say which side is bigger, the debit side where we have 19,600 and 65,000, or the credit side where we only have 74,000. Okay, so we obviously know this side is bigger. We total the bigger side, we get that 84,600. We have to plug that on both sides, and we say, okay, what is the difference between this bigger side amount and that of the smaller side? And you'll see that it's 10,600. And then we obviously bring the balance brought down, all right, which is the same amount as the balance carried down. Okay, so that's how we do the bank account. Okay, again, very important, you need to know your debt click. You need to know the nature of the respective journal in order to do this correctly. Okay, how is this cash receipts journal going to impact the bank account? Is it going to increase the bank account or decrease the bank account? How is the cash payments journal going to affect the bank? Is it going to increase or decrease the bank account? Okay, right. Then we move to stationery. Stationery didn't have an opening balance, so we can hop right into it. We look at the cash receipts journal. There's nothing in relation to stationery. We look at the cash payments journal. We do have stationery under sundry. So in other words, we paid 6,000 towards stationery. So we then say, okay, under details, we put bank because it was a cash purchase of stationery. Okay, and then under the folio over here, we should put CPJ, all right, and put a 1 there for January. Okay, and then we plug in that 6,000. Then we look in the next journal, which is the creditors journal. Did we buy stationery? Yes, we did. All right, for 5,000. All right, so that's creditors control we're going to put in there. Here we're going to write CJ for creditors journal. We put a 1 there, and that was for 5,000. We add those two together, we get 11,000, and we've balanced our stationery account. Okay. Then we move on to the creditors control. And the creditors control, they told us that the creditors control has a balance of 23,320. Okay, then we ask ourselves, okay, cool. We know that the creditors control is a liability. So here you see they didn't tell us whether favorable or unfavorable or what. So automatically we ask, on what side does the creditors control increase? We know that it increases on the It increases on the credit side. Therefore, we are going to put this on the credit side. All right. So we've entered in the balance, a free 1 mark or 2 marks there. We want those marks. All right. We plug that in. Then we say, okay, where else did we have the creditors control? It wasn't in the cash receipts journal, but we can see it in the cash payments journal. Then we ask ourselves, what is going on in the cash payments journal? We are making payments towards our respective parties that we have transacted with. So in other words, this payment coming out of the cash payments journal is going to reduce what we owe our creditors, okay, because they are receiving money, okay? So since they are receiving money, are we going to debit or credit their account? We're going to debit their account because we know that the creditors control, as we highlighted, increases on the credit side but decreases on the debit side. So can you see here, we write bank, and then here we write CPJ, and there should be a 1 over there, and then we plug in that 14,000. Okay, fun times. Then lastly, we go into the cash creditors journal. All right, and there we have a creditors control column, and there we simply write you could have written purchases and VAT, and here we've written sundry purchases and VAT, and we plug in that 15,000, all right, that we calculated, and here we write CJ1. Okay, all right, and then here we see that the credit side is bigger than the debit side, because here we only have 14,000 and here we have 15,000 plus 23,000. Okay, so then we total the bigger side, we have 38,320, plug the same amount on the credit side, and then obviously we say, what is the difference between 14,000 and this 38,320? And we see that it's 24,320. All right, that's our balance carried down, and so our balance brought down is going to be the exact same amount, and we have that there. Okay, then we move on to the next account, which is the debtors control. We didn't have an opening balance there. We only had one amount in the creditor cash receipts journal of 20,000. Okay, then we ask ourselves, what's happening here? In the cash receipts journal, we are receiving money. So in other words, this 20,000 is 20,000 that we are receiving from our debtors. Okay, so how is that then going to impact our debtors control account? Is it going to increase or decrease our debtors control account? Now, if we're receiving money from our debtors, that means that it's going to decrease our debtors control. We know that the debtors control increases on the debit side and decreases on the credit side. So that 20,000 we're going to post on the credit side, okay? Because our debtors control is actually decreasing by 20,000. Okay, right. Okay, I hope you guys are still with me. 2 more accounts that we need to do, and then that's it. So do hang in there. Do hang in there. All right, so trading inventory. We look at do we have any opening balance for trading inventory? No. Did our cash receipts journal have any trading inventory? No. All right, so we go to our cash payments journal, and there we do have trading inventory, 50,000 that we spent there. So in other words, we spent 50,000 cash on our trading inventory. So then we put bank, we put 50,000 there, and under here, under your folio, you're going to say CPJ, okay? And then under your creditors control, you're going to say, is this increasing or decreasing our trading inventory? All right. Yes, we are purchasing more trading inventory, but we're just purchasing it on credit. So that is going to increase our trading inventory, which we know is an asset. So both of these amounts we're debiting. All right. So here you're going to put CJ1, and then we have our 10,000 there. And then balancing it, since it's all on the same side, we just plug in that 60,000 and we balance our account. Petty cash, again, we have no opening balance. All right, we have it in the cash payments journal. All right, so that means that this 4,000 was being withdrawn from the bank and being paid to the petty cash. All right, so petty cash is going to increase. So we then ask ourselves, since it's increasing, are we going to debit or credit? Okay, we know petty cash is an asset, so then we have to debit that. All right, so we write bank under details, and then we write CPJ1 under the folio, and then we write the 4,000. And believe it or not, ladies and gentlemen, we are done. Okay, now if you flip through, just one thing, if you flip through to question 7 and question 8 and question 9, you will see that the things that they're asking over there do not pertain to you guys. For instance, in question 7, they're asking for the individual debtors or creditors. User information, prepare the individual account Moses as it appears in the books. Okay. Yeah, so here this is your individual creditor. Okay. Okay, actually, yeah. This is your individual creditor because Moses is a creditor. We don't do that in unit 1 to 5. Sorry, 1 to 6. That's unit 7 for the degree program. So they removed this stuff from you guys this year. Unit 8 is doing salaries and wages. They've also removed that from you guys. And then question 9 is for your year-end procedures, which again they have removed. Okay, so just so you are aware. Guys, are there any questions or comments from your side? Is there anything else you'd like to discuss with me? Is everybody happy? Okay, I see some of our friends have left us. Oh well, it's okay.